mega pack factory going up in Shanghai, the Giga Nevada plant going to get to 100 gigawatt hours per year, and that a portion of that will be for stationary storage. So if you start doing the math on some of this stuff, it gets really large. We may have an inflection point where analysts start to take the energy side of the business more seriously.
As a long-term investor in Tesla myself and someone who is bullish on Tesla's prospects, I like to make sure I do as much due diligence as I can to confirm my own forecast. Today, we have the pleasure of speaking with an analyst who's also a Tesla bull, but who, as part of their day job, spends time drafting reports and spreadsheets tracking every part of Tesla's business. Matt Smith is an equity analyst at Halter Ferguson Financial, which is a wealth management and financial planning firm. We'll review his analysis on their base and bull case forecast for Tesla's various businesses beyond the auto business and into energy, bots, and others. Matt previously managed the business of power plants, so he uniquely understands the energy market. Along with Bradford Ferguson, they co-wrote an 18-page Tesla valuation report. He's also done deep dives into energy and robo-taxi. Welcome, Matt. Thank you for joining me.
Thanks so much, Herbert. Glad to be here.
So you are a long-term bull. You've been part of the Tesla community. Just start off the bat. Tell me why you think Tesla's a good investment. What are some of your projections? Just what do you think makes Tesla so different? Just start off there.
Yeah, I mean, I could take that in probably 100 different directions, but I think the big thing that maybe is underappreciated is just the culture that they have. So I actually spent time as an intern for General Motors as well, and being in the Metro Detroit area, talked to a lot of people, a lot of suppliers, and just people who work in the industry. And there's a certain kind of culture that I would say kind of permeates the industry there. And Tesla, just the way that they think about things and the pace of innovation, like Elon always talks about, I think it's really just stands in stark contrast to the way that the other automotive companies operate. And it's really clear that they're not just an automotive company. I mean, that was always the knock on Tesla for the first, 15 years of their existence. And some people still say this, they're just an automotive company. Like all the while they were building out this AI capability and building up the energy business. And now that I think both of those segments of their business are really starting to hit their stride in terms of growing into meaningful parts of the business, right at a time when I think like the secular trend is becoming really apparent to your average investors that, okay, AI is like a mega trend that's not going away, that's going to be fueling growth. And like energy and sustainability is another one. And you need storage because of the intermittency of renewables. So Tesla is just like magically poised to take advantage of these, two huge trends just at the right time. And so I think just seeing a culture that was taking these massive risks, even investing in the Gigafactory back in, 2014 or something like that, just seemed like such a ridiculous thing to do at the time. But like you fast forward, 5 years later, and it was like, oh, that was obviously the right move. So I think just their willingness to take risks that makes sense. They're not just taking risks for the sake of taking risks, but they're really deeply thinking through these things and saying, okay, like this is the way that the economy and industry is going. And so if we're serious about, leading this transition and accelerating the transition to sustainable energy, then the implication is that we do this really crazy thing over here that, oh, by the way, if we solve it right, is going to result in massive shareholder value creation. So bit of a rambling answer there, but that's a couple of the things that I think really stick out to me as Tesla as an investment.
Okay, well, that's good. So we'll dive deeper into each of those. And I'll also want to go right into your valuation forecast that you did, bull and bear case. But tell me how you even discovered Tesla, because I know you said that you worked at a power plant years back, which is fantastic. You actually understand how to manage the business of a power plant. Was it there that you kind of already knew the energy business, started hearing about Tesla, or was it just completely separate from your day job there?
So I actually applied to work at Tesla in, it must have been 2009, which was, they were probably not doing a whole lot of hiring at that time. But I was aware of the company at that time, and I just thought it was like really cool what they were doing. I actually spent a lot of time studying physics when I was in college, even though, I also have a finance and a degree in Chinese language as well. But I just really loved the idea of physics. And so the the concept of regenerative braking just made a lot of sense to me. And it's like, well, this is obviously the way that it should be done. So I was just a fan of Tesla, really from the very early days. But I was also a bit of a finance nerd, and from a valuation perspective, once they went public, I just was like, well, this this clearly doesn't make any sense that they're trading at anything close to the market caps of the Fords and GMs of the world when they were not really close to profitable yet, and were just burning cash like crazy. So I was actually, I would say aware and like a fan of the company from close to its inception, at least, but not a fan of Tesla as an investment until around 2017. I started listening to a lot of the earnings calls and digging in more detail, and was like, okay, actually, it clicked to me how they could really surpass Toyota in terms of automotive manufacturing efficiency. And then with the upside optionality of autonomy, if they could actually solve that, then it was just like all bets were off, and you could be like in a market cap in the trillions. So that was really the turning point for me. And then in 2019, when they actually proved out the ramp, that's when I aggressively got into Tesla, and just thankfully kind of hit it right at the right time.
Oh, okay. So gotcha. Interesting. Very cool. I would have loved it if you got a job at Tesla in 2009. That would have been
I
amazing. So
wonder what
you,
would have happened. Yeah, I sometimes wonder if there's an alternative reality that I just moved out to California instead of Manhattan, and just grounded out there. And oddly enough, Dan Priestley, the guy
yes,
who manages the
yes,
semi, and who was on the Jay Leno, like showing him the Tesla semi. I went to high
yeah.
school with him, so I was like in classes with him. It's like I could be doing something else, and still kicking it around
Well,
with
you
Dan
are.
Priestley. So.
Yeah, you are. You're so heavily involved with Tesla. So you discovered in 2009. It was kind of interesting that you said that you invested in 2017, because that was probably okay, the most riskiest time. It was just like a little bit of a dichotomy, right? Because I'm a
Mhm.
startup guy, so I love to discover companies that are early on, which is 2012. And then 2017, 18, it was flat for many years. There was talk about them going bankrupt, and they really were. They almost went
Mhm.
bankrupt. And that's when you thought, wow, this is a good investment. And then you saw that they're beyond that. And then I get the whole thing about once you saw that they were able to truly ramp and their advantages of the factory, that I get. But you know what I mean? 2017, 18 was actually
Yeah.
the nadir of them as an investment, but that's when you went in.
Yeah. So, I was just so fascinated with the company. And, in my job, my company actually had a Model S that they would let their employees drive from time to time. And so it was probably 2016 or something like that. I got to take the company Model S for a couple days, and it just blew my mind. I was just like, oh my gosh, this is the future. Like, this is, I was nowhere near being able to afford a car like that, but I was just like, this is like the car that I want, and I cannot wait for them to launch a lower priced car. And everything about this just makes so much sense. It's such a like better customer experience. It just like I kind of became an addict for Tesla content and information once I had that initial experience. And so then, listening to some of the financial calls and things like that. I mean, I didn't invest a lot at the time, and even if it all went to zero, it wasn't going to be particularly impactful for me. I had a good paying full time job, so I wasn't too worried about it. But yeah, I would say I kind of dipped my toe into the investment in 2017. I don't remember how much I bought actually, but it wasn't a any sort of like make or break sum for me. But in 2019, by contrast, when I kind of really went all in, that was much more. That was a different scenario.
Okay. So you saw the business, you saw the car, but then you were working at a power plant. Was there something there that you saw that Tesla was going to revolutionize energy, or was it just not even something that came to your radar yet? So tell me about that.
Yeah, so I was actually managing a fleet of power plants. So I'd spend a decent amount of time kind of bouncing around all of the different power plants that we did have. But my main responsibility by the time I left the company was I was managing a fleet of mostly wind assets across the country. So we had sites in Texas, Ohio, and then biomass plants in Michigan and North Carolina. So you know, I I would say it wasn't any particular work that I was doing there that necessarily convinced me that Tesla was a great investment. And in fact, I started a YouTube channel to kind of try to break down the energy side of Tesla's business, because I just thought it was really widely misunderstood. Like people either ignored it completely or thought it was going to be like, you know, like bigger than the automotive business and in the next 5 years. And so I just, my experience with the space is that it's extremely complicated and requires a high degree of nuance in order to get the, the story right. But what Tesla was doing, and especially at the time, was really focusing on like distributed, so like behind the meter, um, uh, uh, like energy assets, which really coincided well with my view of where the energy industry was going to go in the very long term. And Elon actually used this one phrase, I think it was on the Q4 2017 earnings call, where he said that the goal for Tesla Energy was to become a giant distributed global utility.
Mm.
And I was like, it clicked when he said that phrase. And I was like, it was like one of those things that I don't think anybody listening really like thought about at all, because it's just like, well, what does that mean? And who cares anyways? Because energy is like a worthless business for Tesla at the time. But to me, that was like where the strategy and the long-term thinking really clicked. And I was like, oh, I think I know what their long-term ambitions are. And so that was when I started, really trying to piece together, okay, how big of an opportunity is this? And, put some numbers around that, and did a couple kind of explainer videos around it as well.
Okay, wonderful. So I want to dive even more deeper into energy. Let's just step back a bit. You and Bradford, you guys co-wrote this Tesla valuation report, 18 pages. You're an analyst, and so you do a lot of projections and financial kind of breakdowns, which is fantastic. And well, I'll put a link in the description to be able to take a look at this. And I know you wrote it a while back, so I'm just still going to do some editing to it. But what I see here is that one of the best cases you've got here, if you look at the alternative scenarios on the last page, your Tesla stock present value, you believe, should be at $1,184. But if you just do the base case, which doesn't include FSD or I think Robotaxi, certainly no bots that time, you got it at $347 for 2030, and at 2025 it should be $300. So that's very base level. But just tell me about how you think about Tesla. What parts of the business is the most expensive, the most valuable, and then let's get deeper into energy.
Yeah, so that's a good kind of summary. So essentially what we did when looking at the business is, we looked at all the different parts of the business. So the automotive business, the energy business, what do we think the margins are going to be on both? What do we think take rates for FSD are going to be in the long run? I think this is a really important piece of the equation that I don't think a lot of the Wall Street analysts actually do, because it takes a lot of extra work to actually break out full self-driving revenues from the automotive revenues, because about half, a little bit less than half of those full self-driving revenues are actually deferred. So it takes a little bit of estimation and kind of tracking over time to kind of strip out those revenues and be able to flex what increases in take rate going forward might do to margins in the future, and therefore cash flows and the value of the stock. But that's what we did. We essentially assumed a base case model that was, we kind of looked at it at two different time horizons and discounted both of those back to the present. But essentially where we believe that take rates for FSD will increase even without robotaxis being solved, just as a function of it being a really great ADAS system. And the more I'm using FSD in my day-to-day life and seeing how it gets better, every month or two, I just think that it's kind of, if you follow that trend to its logical conclusion, but even if you exclude robotaxis, it stands to reason that the take rate will go up, because you're a better product at the same price should have a higher take rate. So I think we assumed some modest assumptions and increases in take rate. I don't remember the exact figure, but I think we kind of gradually ticked it up to maybe 20% in the long run. So still, I think pretty kind of measured assumptions in there. We also, I think at the time, had higher margins or higher pricing for both automotive and for energy, because this was published before the price decreases both on Megapack and across the board on autos. So I think if you took those into account and kind of reran the numbers, the valuation would go down a little bit. But getting to your question of like, how do I think about the stock and which parts are most like valued? The way I think of it is like the core business is like roughly fairly valued to maybe a little bit undervalued. And by the core business, I mean the things that like Wall Street cares about. So basically just selling cars and that's it. Maybe a little bit of energy margin, but that's really just starting to ramp up now. But where I think the stock has so much upside potential that I think is almost unparalleled in terms of just like how disruptive the technology Tesla's developing could really be, is that they've got, both the robotaxi potential and the Tesla bot potential. And it's like, so that $1,184 share price, that's a present value share price, essentially assuming that they solve autonomy and launch the robotaxi network in a couple of years. That's what the share price would be worth today on a present value basis. Then the Tesla bot piece of it is like a significant multiple on top of that. We did a valuation more recently on what that piece of the equation would look like, and it's just like an absolutely nutty amount of value. So what our kind of base case valuation came up with an estimate of $18.7 trillion as the present value for the Tesla bot. So obviously there's like a decent amount of execution risk in both the robotaxi network and the Tesla bot. So like it's the stock should definitely not be valued at those levels today. But seeing how like nutty the economic potential is of this company is what makes me so excited to hold beyond just kind of the core business that Wall Street in folks like Adam Jonas think is kind of nice.
I love it because you're an analyst. You got this very beautiful spreadsheets and you're very, very careful. I'm sure you got the auto business really well ramped up. I want to talk about energy. You got that really well ramped up. And then you do the bots and it's like, and like you're trying to be conservative. You're trying to be accurate. And it's like, how do I rein this in? But you can't.
It's
right?
like, you've got to make some assumptions. And I think most people, James Dalma had a great quote on this recently. I forget exactly what it was, but it was something to the effect of like, serious people don't say nutty things, and it's like, that's so true. But if you really are trying to think from first principles, and I really do try not to be like biased on the bull side or on the bear side. Like one of the things I really try to do on my quarterly earnings per share estimates is if I'm not missing high and low with like relative, like on the same amount on a relatively similar frequency, then I'm biased one way or the other. So I want to try to take my own bias as much out of the equation as I can when I'm developing these spreadsheets. So, when you're looking at something like the Tesla bot, the potential is just so enormous. I mean, if they're actually able to train this to do basically any type of work that a human can do, like, all right, let's put that on paper. Yeah, I actually started my career off in valuation. So like I really got really good at the skill set of, we would value these intangible assets. So like I had to do a valuation for GAAP reporting purposes of what's the value of an assembled workforce, or of I would do goodwill impairment testing where you'd have to essentially or do like purchase price allocations where you're saying, okay, what's the value of trademarks and company know-how. It's like, all right, well, let's put some numbers on paper. So I got I would say relatively adept at being able to take qualitative problems like that and translate it into quantitative outputs on Excel. And so I've just over the years kind of trained my brain to be able to say, what do I think this technology might actually be capable of doing, and if so, like how big is the market for that, and like in order to be competitive and compelling to your customers, what does your pricing need to look like, and then what does your cost structure look like? And so just thinking through each step of that, and that kind of creates a valuation, and going through that process for the Tesla bot just gets you these nutty numbers that I think James Dalma was alluding to, although he was talking about autonomy, I think, but I think the same thing applies to both autonomy and bots, where if Tesla actually can solve this, and if AI really is this huge shift in economic outcome that myself and many others think that it will be, then we are at this inflection point that's frankly going to be a little bit nutty.
I love it. First of all, kudos to you for being able to do that skill. It's very hard. Not everybody can do this. And we know a few analysts local to our Tesla community that cannot think outside the box, can't change their spreadsheet, but you can. So thank you for doing that. Um, it's funny that we're talking this way because initially it was very, very straightforward, right? Just 6 months ago, it was very straightforward. There's the auto business, and then there's the energy business. You and Bradford have been doing a lot of great work on the energy business. In fact, Bradford camped out for 7 days in front of Lathrop.
He's hardcore.
Counting mega packs. I don't know anybody else who's ever done that to really be an analyst who understands it and really can see, right? Feet on the ground. So the two of you are able to do things like that. So it was a auto business. And which business do you actually think could come sooner? Is it FSD? Is it AI? Is it energy? Is it bots? Which one? Now we're debating which one might come faster because we all thought these were all very far away, but they've all come so soon. What's your mind is the next one?
Well, I think there's differences both in the timing, but also in the magnitude of the impact. So, like, I actually think we're going to start seeing a pretty meaningful ramp in gross margins on the energy side of the business this quarter. So this may age horribly, but I was doing my my estimates for Q3, which is going to be released a week from today, and I was coming up with automotive gross or energy gross margin of around $500 million for the quarter, a little bit over that actually, which is roughly double where they were just the quarter prior. And that gets to a $2 billion per year run rate. So I think at that kind of contribution level, the analysts are going to have to start taking or considering it and modeling it into their spreadsheets because it's a very real part of the business. I think for some parts of the business that have been like nice, like credits, for example, they're just like, we'll back it off because it's not really core business. But you can't really do that with like energy margin, which is ramping so aggressively on the back of the Lathrop ramp, and then on top of that, they're ramping up their battery production across the board. Megapack factory going up in Shanghai. They've talked about the Giga Nevada plant going to get to 100 gigawatt hours per year, and that a portion of that will be for stationary storage. So if you start doing the math on some of this stuff, it gets really large. So I think we may have an inflection point where analysts start to take the energy side of the business more seriously. But that said, like I don't think even if they fully value the energy side of the business, I don't think that warrants like a 2x of the business. I just think that the energy ramp is going to be a little bit slow, even though it's kind of starting to get into the steep part of the S curve right now. So I think a little bit of kind of prudence there is warranted. Maybe that pushes the stock over 300 or something like that. Not investment advice, but it's just something I could see happening if they, if Tesla really does surprise and people start taking the energy side of the business seriously. But I think what's more exciting to me is autonomy. So, I mean, V12, that video was so impressive. And I think the thing that's even more impressive about it is just the potential for the rate of iteration to really increase. And especially with the fleet size being what it is right now, and the fact that their compute capabilities are increasing at just such a staggering rate. I've fallen victim to believing Elon's timelines, even with a little bit of a discount. I think in the past said, okay, he thinks something will be ready in 6 months. I'll give it 18, and maybe that'll be there. Obviously, that's been wrong, kind of time and again. But to me, it seems like both the approach they have, the compute capabilities they have, the size of the fleet, all these things seem to be aligned, and frankly, in their V12 architecture, where I could actually see like massive leaps and bounds to the point where you could be interventions will be decreasing at an extremely high rate, and then eventually, when that rate gets low enough, then you can flip the switch to autonomy. So I think we might be surprised by how quickly that comes. I don't think it'll be by the end of this year or in the next 6 months, but I'm really excited over the next, let's say, 18 months to see how close they get to something that's actually just like phenomenal. Because I do try to be a realist with FSD beta. Like I had a drive this morning. I was frankly awful on the new 4.7.2 or something like that. there's still way too many interventions. So like you can't take robotaxi considerations seriously when it's still doing stuff like this. So I'm really excited for that, but I'm also slightly hesitant because I want to kind of see firsthand the improvements in my car before I get too excited and thinking that the stock's going to move.
Yeah. Okay. Yeah, and they've said that Ashok said that the FSD 12 may be in customers' hands by the end of this year. That was his statement he made.
That would be phenomenal. I don't know how they do that. I'm curious. What do you think though, Herbert? Because I think that one of the issues with V12 is that it's such a black box. Like you don't know why it's making the decisions that it's making. So like, is there some random odd case that it's going to make a horrible mistake that's completely like the user wouldn't be prepared for because they've never seen it make that mistake? I don't know. To me, it just seems like a different like QA QC kind of process than they've had to go through before. But
I think it's the opposite. It's the opposite because one of the things that James Dalma says is that what's unique about this neural net end to end and the computer making decisions, you don't know what's happening inside the black box, is that they're feeding it videos that's been curated. 144,000 hours of video per day based on millions of videos that it has already been curated. This is the curated video by Tesla, employees who say these are the 5-star Uber drivers. Here's the best way to do this correctly. So the chances of it to actually do the completely stupid thing is much less than it is now, which is, if you see this, then you make this decision. If you see a stop sign, you should stop. They don't do that anymore. So that's why I don't know if you should base any decision on FSD based on FSD 11 anymore, right? It's still making lots of mistakes.
It's already irrelevant. So like that's what you have to be doing as like an analyst or as an investor is like the current state is not where you want to be looking at it, except to the extent that it gives you an indication of how future progress might be made. So but you're absolutely right. Like I just frankly can't wait to get V12 to see what it's like.
Yeah, we're making leaps and bounds, but it's based on what ChatGPT was able to accomplish because it's using the same model. It's based on even Wave, Wave.ai just produced their own report of a world model that it's able to determine, and it's based on the demonstration that Ashok has been showing us. So it looks really, really powerful. It looks like it's going to work. So I agree with you. The confidence level is really high there. Before we get into that a little bit more, I should just mention this. So I did an interview with Brian Wang, and he said that even if you don't put in robo-taxi and you don't even consider regulatory approval at all, and assume that never happens, but like you said earlier, the FSD take rate will go up. Now you said 20% take rate. He went up as high as 50% because if the ability for FSD is so good, much better than it is now, more people will buy it. And they may not use it as robo-taxi, but they'll do it for safety reasons. And if you do a 50% take rate, what happens is that he calculated that the revenue will be $80 billion, which is the same amount of money that Amazon gets for the AWS division. And the AWS is what caused the Amazon stock go up by 4 times. But he said that at $80 billion, it's 4 times, FSD is 4 times more profitable than AWS is. And so just that alone, FSD take rate alone, should be equivalent to what AWS did to Amazon. And if not more, to the stock.
Yeah. So I've got a lot of thoughts on that. First of all, like I kind of agree conceptually. I think at least with today's prices, 50% just strikes me as potentially a little bit on the high side. But it could happen. I think the problem is a lot of people don't want to pay that much out of pocket. So I think they might need to get it, to the point where the overall car payment, inclusive of say an FSD subscription or lease or something like that, is, I don't know what the right number is, but $600, $700 a month, something like that. And so that's where I think the Gen 3 platform could actually come in and like save the day. Because if you have, a $25,000 car and then you wrap in a $12,000 FSD subscription and you wrap that into a lease, all of a sudden that's going to make a whole lot of sense for a lot of people. And if Tesla's costs of manufacturing are, I don't know, say $20,000, then you've got, $12,000 of gross margin on a $32,000 vehicle. I mean, the gross margins on that are just insane. Now, like if this lease, there's a little bit of like time value of money difference, but from a net present value perspective, it doesn't matter whether they buy it outright or whether they lease it. But like that's where this is going. But they're going to drive the hardware cost down to the absolute bare bottom, as low as it can go. And then
And raise the
eventually
software
the
prices.
software
Yeah.
prices are probably going to go up. But even if they just stay where they are, you'll get to this point where like you can buy FSD and a really compelling electric vehicle for the same cost of an ICE vehicle, and it'll be cheaper to operate, and it will drive itself. Like that value proposition is something that I think the world has never really seen, and so I think that's what's going to really propel kind of demand in the medium to long term.
Now, I'm going to put you on the spot then, because earlier you said that energy should, not investment advice, obviously not, but if the investors start recognizing energy, and you gave good reasons why, Lathrop, are they already at full capacity at 40 gigawatt hours, or
no, they're not yet. Bradford did another stakeout actually, but I don't think he's publicly released those numbers. But no, they're still ramping up. It's higher than it was. It's kind of as you'd expect for any kind of product that they're ramping. But they're not fully ramped yet. And keep in mind, there's like a lag in revenue recognition. Even once Lathrop is ramped,
right,
then they have to get shipped to the customers, and maybe the revenue isn't fully recognized until the interconnect for the project is signed and is executed. So there's there will be a little bit of a lag there.
Okay, but you said earlier that if investors start recognizing that energy is a real business, it contributes significantly, that maybe the stock goes up to $300. Then next year, I'd ask you which of these other new businesses might come in to give it a bump. You picked FSD. And so do you think that next year that the stock might go up? Best case scenario, they release FSD 12 to customers by first quarter of 2024. Is that enough? People see that? Or do you need to see actual FSD take rates going up? And could that happen by the end of next year?
Yeah, well, that's a great question. And if I had a crystal ball on that, I'd be
Don't say crystal ball.
making some pretty aggressive portfolio changes. I promise you that. But like, I do think it's definitely possible. I mean, let's just say, V12 launches in Q1 and it actually does kind of blow minds. And, it's just like, I think one of the biggest problems people have is the jerkiness of it. And it behaves when it behaves strangely, it behaves strangely in a way that a human would never behave in that particular way. So like if those types of errors kind of get weeded out and the intervention rate just goes down and it like kind of spreads like wildfire, like so many people today don't even know that the kind of current level of full self-driving capability is even available like anywhere. So I think if there's like, I don't know, a movie or like an advertisement, we could open the door up to that of just like the actual capability. If the general public becomes more aware of the capabilities of full self-driving, and they're actually significantly better than what they are right now, then I think it stands to reason that take rates could increase. And then if you start seeing that roll through the financials, say in Q3 or Q4, then Wall Street has like more kind of incontrovertible evidence that this trend is taking place. And so, yeah, I could see that, kind of going off to the races. But I think there's maybe like two stages to this that I would think about. One is when us in the Tesla bubble and early adopters and people who actually drive FSD beta, like finally get it. And it's like, okay, this is actually like solved or extremely close to being solved. I think that alone might trigger a little bit of movement in the stock. But I think that the bigger catalyst would be, if, they can show take rates doubling or, an incremental $1 billion of margin coming in a quarter because of FSD or something like that. And that type of upside is very much possible. But if that starts to show and they can actually give color around, we saw our take rate increase and customers are, saying they really enjoy this and yada, yada, yada. And it's actually showing up in their financials. Then I don't know how the stock doesn't move in that type of scenario.
Yeah, I generally agree with everything you just said. I think that there could be a ChatGPT moment for FSD, though. Elon has talked about it. I actually was talking about it before he said the ChatGPT moment on TV. And so what could that look like? This is a moment when the public realizes that this technology, while not perfect yet, is inevitable, that it will happen. That's really the moment. And so what does that require? Like you just said, first of all, FSD version 12 has to be in our hands, and we need to see that it's like, oh my gosh, this is now a step change. It is so good. it's not making as many issues and so forth. The moment though, I think that could happen, and this is a total guess on my part, is the what they call ASS. What do you
Yeah.
call that? Actual smart summon.
Actual smart summon. Yeah.
Which is this ability to call your car, drop you off at the Walmart and then let the car park itself. And then when you come out, let it pick you up. I think that in the parking lot, when people start seeing a car that's driving without anybody in it, and I know that you can kind of do it right now, but it's just not very, it's very
bad.
slow.
Yeah.
It's bad. Not few people, I don't do it, but if everybody starts doing it, all of us, you and me start doing it just for fun, people will take videos of that and they'll go, TikToks, and they'll go out there. And I think that that's when that's the measure, the understanding that, my God, this car can navigate, can, do things intelligently. That's just a guess on my part, but that could happen, a ChatGPT moment.
Yeah, I think so. And I mean, I think ChatGPT is such a good analogy here because, like, hearing people who are way more smart than I am and around this stuff, it's like the capabilities of ChatGPT 3 and comparing that to ChatGPT 4 are really not that much different. What was different, it was essentially how it could interact with like common, like non-technical people asking it questions. And so I think that's the same sort of thing right now where like my mother-in-law just used my car on a trip to Chicago and it was like great until it wasn't great. And so I think her overall experience was like, well, like the most stressful part was construction, and she had to kind of take over because, FSD was making her more stressed out in that type of area. When it does the opposite, and when, you're seeing like you're just pushing your cart full of groceries at Costco and you see like some, EV come, like a valet guy, and you're like, oh, I didn't know they had valet at Costco. And then you're like, hey, there's no driver in there. Somebody just gets in. Like, that's like one of those moments where like the jaw hits the floor. The kids are just like, whoa, like,
yeah.
And so
videos,
I think
they can take videos of it. That's my thinking, right? You need to see more videos of, people it happening.
Yeah, and so people will buy the car for that feature alone. Whereas, I think right now in this kind of current moment that we are, a lot of people, who maybe aren't educated about the benefits of EVs, just like, well, like I'd rather have my F-150 or my Jeep, like whatever. They just don't want to like deal with trying to learn a new thing, or they've got irrational fears around like range anxiety and things like that. But if you say I've got to get that ASS feature, like that's just the must have, then like that can compel a lot of buying decisions.
It's usually something small but it captures the imagination. That's what matters. So let's talk about things that you are. What's cool about you, right, is that you do very deep analysis. You're very, very numbers guy, and that we explained earlier that you're able to also take abstract ideas and bring it down to paper. But you also have very different thinking than many of the Tesla community. One of the big ones is advertising. You're a big proponent that you think that Tesla should be advertising today. We don't. I know that this has been debated like crazy amongst the group, but I know you are very strongly opinionated about it as well. So, I think that you should advertise today, but I didn't think you needed to advertise 6 months ago. And I don't think it's a must do, but you seem to be very, very opinionated about it. What's your reason?
Yeah, well, I think, the biggest reason is that I talk to so many people who do have these like wild misconceptions of like, range anxiety or like, don't Teslas blow up? It's like, no, they're actually like by far the safest vehicles on the road. Oh, really? Like, I didn't think that was true. They're just, I think there's so many people in this community believe that like the path to EV adoption is just like inevitable, and I think it is too. But I think we're kind of at this moment where a lot of the early adopters have adopted. Tesla's still trying to grow production by 50% a year, and so if you're trying to grow your deliveries by 50% a year, like that means you need to kind of branch out into different customer sets that you weren't targeting before, or who aren't aware of your company. And so like Elon, I think, does a lot of great free advertising on X, but most of the people I know in the real world are not on X, and might even just have like either misperceptions or just don't think Elon is a great person potentially because of something they heard about, something that he posted on X. So I think most people aren't getting their information in the same manner that you and I are, Herbert. So I think just some sort of campaign to just get the general public a little bit more aware of the various benefits from like how awesome the smartphone app is. I mean, just like one example, I was landing late at night from a flight. I had to park my car and outside parking at the airport, and it was covered in like, I don't know, 6 inches of ice or something like that. Well, right when I landed, I was able to just defrost my car, and then by the time I got there, I didn't even have to scrape it. Like that's an amazing like convenience feature, and you can't do that with an ICE car, obviously, because you can't the car's not smart enough to know if it might be parked indoors at a garage, and then all of a sudden it's spewing CO2 in an enclosed space. So like I just think there's so many areas like that where the product is so compelling, but it's hard to convey how compelling the product is to people who just aren't that interested in it. So I think it's like a creative person who's like, I'm not a creative person. That's not my skill set. So I don't want to pretend to like tell Tesla how to go about this. But I know that there's some way that Tesla could at least experiment with trying to get the word out around how great their vehicles are, aside from just cutting costs. Because it seems to me Tesla has just cut costs, and that's been the only tool in the chest. And my point of view is, let's just try some more tools. And if this ad campaign turns out to be like a total like bust and it doesn't work, that's great. Like we don't have to continue it, but we won't know unless we really try it. So my point of view is like, let's just try a couple different things to really advance the company's mission, which is to accelerate the transition to sustainable energy. And I think relying on price cuts alone is just a blunt tool.
Okay. Well, I mean, my concern is the people, and you just kind of mentioned it, which is like, instead of price cuts, we should have done advertising. And I think that I don't agree with that concept. So my position on this is simply that, you price cut, that's your top priority until you get the price of electric vehicles is at parity or below the ICE cars. That's priority number one. The number one reason people buy cars is not based on safety, which is shocking. It's based on price. So if the car is priced more than other cars, you're not going to buy it. And why would you advertise something that's $20,000, $30,000? If some of the people in our community was advocating that they should not have cut the prices in January, you'd be advertising like crazy a car that's $20,000, $30,000 more than the average car out there. That's ridiculous. And this is not part of the mission. So bring the car price down. We're there now. Number two, Tesla is advertising. They're advertising in China. So I do agree with you that we are at that point now where they need to advertise here, and they will advertise here. So I'm not sure why there's this group of people who think that Elon's already come out saying that we'll likely do advertising. When he said that, by the way, people thought, the audience members, and they're shouting, and it made him realize it. And so at that, that moment, he said, okay, you guys really want it? I'll go do it. He had already had a team. There was, it came out later that they had already had a team already looking into advertising. They're not against it. They're already doing it in China, and it's working really well in China. And then you just might have seen last night that they did an advertisement in Hamada Airport in Japan, like a full-on advertisement. You see the car driving, you see how to use it, you see the superchargers, you see how to use the apps. This is not a fundamental thing that they're not going to do. It's just that it's not about price cuts versus advertising. You price cut until you get to the point where you're below the prices of ICE cars. That's my belief. Now that we are there, and they're still going to keep doing price cuts, by the way, but they should now add advertising. So that's my quick answer.
And I think you and I are probably mostly in agreement. I think people who've heard us on like Spaces before might think that we're diametrically opposed on this, but I really mostly agree with what you're saying. I think my slight tweak might be to be a little bit less binary about it. Like try like a little bit of advertising in conjunction with price cuts, and just kind of play with that formula and see what works. So I don't think you have to price cut only until you get to parity. I mean, because for example, one of the things that most people don't know is that the variable cost per mile driven is so much lower with the Tesla. So your maintenance costs are lower, no oil changes. The fuel cost is obviously significantly lower. So, but people don't look at total cost of ownership. But maybe there's some segment of the population that didn't know that, plugging in your car is like a third of the cost of fueling up your car. So
Yeah,
like to me, there's like a very easy advertisement there, just kind of explaining that point, and that might help to break down some walls. So I just think it's not binary. It's not price cuts until you get to a certain point. But that
I
said,
agree
like
with
I've
you.
always advocated for price cuts. Like my models going back to 2019 had a
Mm,
5% price cut every single year. And so I was
right.
actually quite shocked when in COVID we're raising prices like crazy. It's like it was not my bingo card to be raising prices.
Yeah, the prices of the cars today is the same prices that it was released in 2018, the Model 3, and 2020 when the Model Y came up. They're just now at the same price. So for
That's
me,
true. I do think there's some misconceptions around that though,
mm,
because we've
okay,
had a decent amount of inflation. So your cost of goods sold is
yes,
actually higher now.
understood,
So like,
understood.
yeah, it's true that we're priced at the same dollar value, but like the cost to produce has actually increased pretty significantly, and that's because
Well,
of the inflationary
I
forces. So if you look at the
I've
gross
learned.
margins, they're actually lower now.
I could disagree with you there. Sorry. I've been learning
Well,
from Jeff Lutz, who's a supply chain expert, and he said the highest cost of goods is at the first 2 months of the product release. And then, of course, the supply chain issues with COVID made the cost of goods skyrocket. But since then, they've been able to reduce. All the supplies have gone down, lithium supplies have gone down, and Tesla themselves continue relentlessly lowering cost and expenses and cutting things. And so I wouldn't be surprised if it's now higher margins, even with the price cuts. Have the price being the same, they'd actually have higher margins now than they would have if everything stayed the same in 2018. Jeff
so
Lutz. So
that's like anecdotally that kind of makes sense. But if you just look at their financial statements, like starting in 2019, their automotive gross margin was like 22.8%, 22.5%, 25.5%, 25.4%,
Jeff pointed out
27.7%.
Jeff pointed out it's because of the two money furnaces of the two gigafactories that happened last year. And as they ramp now, we're going to see this dramatically fall at this point. And so that's what he's saying. There's going to be surprise to people because they're not realizing that the reason why that happened is for these two reasons. So we'll see. Okay.
Well, yeah, that's a
Good.
thesis, like I would just say as of like, if you take, because in that time period that I was quoting, like the Shanghai plant was also ramping. And you like had Fremont being a significant portion of the totals there, which is like a horrible plant for in terms of gross margins, at least relative
Yeah.
to
Yeah.
Shanghai and probably the steady state of Berlin and Austin. So I hope Jeff's right, but just looking at the actual figures right now and for the last many quarters, the cost of goods sold has been higher than those previous levels. Even though the price, the sale price is essentially normalized, the cost of goods sold has not. So I'd love to be proven wrong on this point, but I don't really see that happening, at least immediately. Maybe in the long term, and certainly when Gen 3 ramps, that will go a long way toward reducing cost of goods sold. But yeah. The time will tell. That's the nice thing about this. And I'll be happy to kind of admit I was wrong if Jeff turns out to be right.
I would put my money on Jeff, right? Because this is his business. This is what he does. He really understands inventory, supply chain, manufacturing. He knows his stuff, and so I trust a lot of things he's saying. So we'll see. Like you said, well, we don't know because I was surprised last quarter that the gross margins were just even lower than what we were thinking it was going to come back by the first quarter. We thought it'd come back in the second quarter, and now here in the third quarter, we'll see the actual financials here in the 20 days from now or next week. We're going to see the actual
7
numbers,
days,
and it could be that the cost of goods has not yet hit, but it will. So if it's not this quarter, I'm just a perpetual optimist, but I know it's going to come, right? The margins will appear,
kind of
even
getting
with price
to
cuts.
what we were saying before. Like I want to miss high and low in equal increments, and
Good
this is
point.
one where I just
Okay.
To me, it seems like hoping that that view is right, and eventually, like, the costs, I think, will decline. Like, certainly, if you look at the cost of goods sold for Berlin and Austin, those costs are going to decline. Like, there's no doubt about that. Just with higher utilization, and we saw today the 4680 in Austin
Mm,
had a big milestone, hitting, I think it was 20 million cells. So
20
that
million.
ramp seems to be going really strong right now, and that's going to go a long way toward lowering costs there. But you're talking about, equivalent to, I think it was like 20,000 vehicles that you can be getting. So, like, the cost benefits, I think, are just relatively small right now,
Hmm.
compared to
Hmm.
the overall size. And then the fact that, like, I mean, look at where CPI has been, and, like, commodity costs. Lithium is still, even though it's come down, it's higher than it was in 2019, 2020. And so you can't really kind of manufacturing optimize your way around those sorts of issues. So if you're selling, your car at the same price, but your single highest commodity cost has gone up, it's just gonna be really hard to kind of overcome those hurdles. So I love
Mm.
Jeff, and this is time will tell. But this is one I'm kind of happy to take the take the under on him.
Okay, that's fair. I mean, I agree with you. I think so. The biggest risk, everything's going so well as far as we are saying, except for the 4680. So I still think it is battery constrained as much as they kind of said at the beginning and then they kind of backtracked on that. I think they're battery constrained. Specifically, 4680 has been much lower. That's the risk for me in the next year. What about you?
I mean, to me, I think the biggest one is lack of demand slash, like, more price cuts. I mean, I don't think anybody was expecting the level of price cuts this year. That if you go back to, I think it was the Q4 call where Zach kind of issued some margin guidance that said they would,
20%.
stabilize around, what was it, 20, like the
Hmm.
20s or the high teens, something like
Hmm.
that. And now, like, we're kind of going right down significantly below that. And even on the first quarter after that, it was like, well, it was clear they missed that right away. So I think nobody really has a perfect crystal ball on where demand is going to be next year. And given the fact that some of these trends that we've been talking about, that makes me so excited about the stock in the long term, those are probably not going to pan out in the next 6 to 12 months. So I
Hmm.
think the biggest risk is that those don't materialize, and macro continues to be a little bit weak. Consumer
Right.
spending dries up, interest rates are high, and that makes car purchases more expensive. And so then it's just, like, what does Tesla do in that situation where they're trying to ramp to, I don't know, 2.5 million vehicles, but demand is even lower than it was in 2023. Like, that's I think a real. I like to think about the actual, like, supply and demand,
Hmm.
charts of Tesla's supplies every single year. I can't get this right. Every single year, Tesla's essentially shifting the supply chart up, and what that does is it lowers the clearing price for customers. And so if you're doing that, if you're following that strategy into economic, where the demand curve has also shifted downward, you're getting a double compounding price increase, or price drop. And so while Tesla's margins and manufacturing efficiency are super strong, we could be in a scenario where we're basically doing what Elon said he would do, is just sell the cars at break even and hope to make it up on FSD on the back end. Um, Now, that might not be the worst thing in the long term. There probably would be some good buying opportunities along the way, but that's, like, I think, my number one, two, and
Hmm.
three concerns right now.
Okay. So, which I think is absolutely correct. You've changed my mind a little bit there. Thank you for that. So this Sawyer Merritt put out this poll. He had almost 20,000 people vote on it. So I'm very curious how you voted on it. And he said, "What is, in your opinion, the biggest issue for Tesla? Is it affordability? Is it the macro conditions? Is it awareness of pricing, or is it production?"
So, awareness of pricing specifically,
Mm-hmm.
because so I would maybe amend it slightly. I would say just awareness in general is probably their single biggest issue. Because I think there's a massive segment of the population that isn't considering an EV, that if they were more up to speed on the value proposition of Teslas, they would be in that buying pool that would consider them. But right now, they just don't. They go to the dealer and they ask what's on the lot, or they, yeah, just
Mm-hmm.
assume that they'll get the similar sort of car that they bought before. And they just don't, you know, they don't have people that like you and I,
Mhm.
just like talking nonstop about Tesla and why it's so great and the customer experience. So I really think lack of awareness, or if you could just magically increase awareness overnight to where 50% of the population kind of
Mm.
knew what, not us because we're like really deep nerds, but like an average Tesla owner, let's say, who's not passionate about the stock or Elon or anything like that, just they understood what an average Tesla owner experiences.
Yeah.
I think
Yeah.
you'd see a huge uptick in sales because more people would be like, oh, you know what, like, yeah, I could get a BMW or a Volkswagen or whatever, but I really like the convenience and the sleek look and the safety of a Tesla. So I'll do it for that reason. So to me, I think awareness is like, if I could
Yeah.
wave a magic wand and just change one thing, it would be that.
So the number one answer out of 20,000 votes was the macro conditions, which is actually your answer that you just gave 5 minutes ago. And then the second answer was affordability. And then the third is awareness. But affordability and awareness were 24% and 22%. So very, very close to each other. I agree with you with awareness, of course. The reason I fell in love with Tesla, I was somebody who wanted to invest my money in the green revolution. I invested in a bus called Ballard, and they failed. They're still alive today, but the investment was nowhere near. They just couldn't do it. I think it was hydrogen fueled kind of electric, but I just wanted to invest in something. Then when I discovered Tesla, what blew my mind, what just made me go, oh my God, this is a company I want to do. It makes so much sense, was the awareness where I understood that there's no engine. Like there's no,
Mhm.
the engine is the size of a shoebox, and 200 parts don't need to be in it because they have a frunk, and the frunk, because it's empty, they have more crumple zones. And it's one of the reasons, and the battery, that those two reasons alone make this safer. It's just all of a sudden, what? Because they don't need an engine, I don't have to pay for service. And I'm so sick and tired of, 5,000, 2,000, whatever the garage tells me I need to do for all of my cars I've ever to do. I'll just take it. Say, yes, sir. Let me pull up my wallet, pay you whatever you told me I have to pay you for services issues. So I think that people don't even know that. They don't
Yeah.
realize, like you
It's so
said
true.
at the very beginning.
Yeah, and like my very first car, the transmission blew out on it, and it was like as much to replace the transmission as it was to like as the salvage value of the car. So I was like, well, I guess I'm gonna have to get a new car. And so
Yeah.
then when I found out that a Tesla didn't even have a transmission, I was like, oh,
Yep.
that'd be sure nice to like not have my car fail in that way. So I think there's
Yep.
just like so many people.
Yep.
The electrician who installed my home charger for the Tesla was like, so where's the gas tank on this thing? I was like, how do you, of all people, an electrician installing a home EV charger, not know that these cars don't have gas
Oh, maybe
tanks?
thought it was a
And you
hybrid.
just,
Yeah, but still. Yeah.
yeah.
Understood. Yeah, the awareness is very low. So yeah, they will advertise. So that's my point. It's like, let's not fight about it, because it is no doubt in my mind they're going to advertise. They already are in Japan and China, like I said. It's going to come. No worries. But yes, right now they're selling everything they can make. But yeah, why did they lower the price? Good question. Okay. Great conversation. Thank you so much, Matt. I love your unique approach, of course, is that you're both a numbers guy, but you're also an optimist, and you also have the ability to think big, and that allows you to see the bigger picture and the small picture quite nicely. I will put a link to your Tesla valuation. I know that it's a little old, so there's some numbers that it's you're going to update. Folks, follow Matt on Twitter. He has his handle at Matt Chasm Matt. And I know you said that you wish you changed it a long time ago. MATCHASMMATT. His company is Halter Ferguson, hffinancial.com.
Also,
And
Rebellionaire.com. We've
right,
started
Rebellion.
taking some concentrated clients recently who have
Right.
concentrated positions in Tesla or other names, and I think most financial advisors won't work with people like that. They'll just sell your Tesla and then I'll work with you. So
Yeah.
that's something we've started doing recently that I think has filled a niche for people pretty nicely.
Exactly. There's a huge demand for people to help you manage your money, but you want to be majority Tesla because you believe in it so much. And the generic answer by most financial advisors is spread out your basket. But reality is that we didn't talk about this, but Tesla is an ETF.
Yeah, yeah, that's somebody had that great tweet one time about like all the different startups within Tesla, and it's like all these different segments and all these different areas of opportunity, and it's so true. They really are an ETF, but it's like an ETF of like all the coolest and most profitable things about the future. So
biggest
it's like,
business. Yeah. Awesome. Thank you much. So Rebellionaires, rebellionaire.com. Thank you, Matt. Appreciate
thanks,
you.
Herbert.
See you
Great
next
talking
time.
to you.